So I'm Steve.
I'm Riley.
Tax Force is our company. What's the segment called? The segment's called Teaching Riley.
So going into December, we wanted to get this video out because we are coming up to the end of the year, so we're running out of time a little bit, but there is still time left to do some tax planning around charitable donations. And we wanted to specifically talk about the difference between donating a stock versus selling that stock and donating the cash, and what the difference is there, and why you might want to actually just donate your stocks if they've gone up.
Absolutely. So what's happening this year is we're right now at the end of 2020, we're actually seeing a big rise in the stock market. Mm-hmm. Certainly anybody that bought stock after COVID hit, but even those that owned stock beforehand, a lot of those have still gone up in value. And there's a massive tax advantage to donating stocks and mutual funds if they're held outside of your registered account. So not your RSP, not your tax-free savings account, right? Not your registered education savings account, but just in a normal trading account. If you donate those stocks as opposed to donating cash, you get the charitable donation for the full value, but you don't have to claim the capital gain. So there's not very many places in Canada where you can make an income and not have to pay tax on it. This is one of them.
So if you decide to do that and you decide to donate that stock, then you can carry that forward 5 years, right?
Charitable donations can be carried forward 5 years, yeah. So if you don't need all that donation this year as a tax deduction, you can claim that any or all part of that each and every year for this year and the next 5.
In the next 5 years.
Yeah.
Okay.
Yeah, definitely. So we're going to run through an example here of just how it works to be so very advantageous to donate stocks as opposed to just donating cash, right? And the idea is that, you know, if you had fair market value of $50,000 on some stocks that you're looking to donate, and you know that might sound like a big number to a lot of people, this really works for any amount of money that you're looking at donating, right? If in our example, the cost of those stocks was $10,000, that would mean that you have a $40,000 capital gain. Generally,
that's taxable.
That's taxable, that's right. So capital gains today are taxed at 50%. Or sorry, 50% of the gain is taxable at your tax rate. So in our example, that would be $20,000 is taxable. At the 46% tax rate, that would mean there'd be $9,200 in tax you'd have to pay on your $50,000 in stock that you sold that cost you $10,000 originally. Well, that leaves you a lot less to donate. So in that case, if you sell stocks, 50 grand, well now I'm only left with what, 40,200? So now I'm only donating that. That's all the money that I have left. Right? So that only would give you a taxable savings, again at the 46% tax bracket, of about $18,800.
But if you were to donate the full stock itself,
so now you're donating the whole 50, right? Not the after tax amount.
But you're not paying any tax on that.
You don't have to pay any tax on it because you've donated the stocks, right, or the mutual funds. That would then give you savings of $23,000 at the same 46%.
Plus, you're donating more to the charity.
Exactly. The charity's getting $9,200 more.
So really, it's
you're getting a bigger tax deduction. It's a fantastic win. It's, you know, to be able to give, to be able to make income that you're not having to pay tax on, and to be able to get a tax deduction for it, it's like the perfect trifecta. Right. So it's a massive difference. In this example, again, you're actually saving an extra $4,200 in tax, and the charity's getting an extra $9,200 to do their good deeds with. Now, there are some times when giving stock, donating stock, is the wrong thing to do.
Like if it went down.
That's right. If your stock's gone down, you actually want to sell it so that you can have that capital loss. Sell it, have the capital loss, donate
the cash.
Donate the cash.
And then you can use that capital loss against your capital gain.
Against other capital gains. Right? And you can either carry that back
3 years.
Right? Or forward indefinitely. Right?
So that makes way more sense to sell it in that case.
Absolutely, because that's where your tax savings comes out of the sale in that case. And because there are no tax, you sell it again. If this was a $50,000 but your cost base was say 60, there's no tax due, so you still get to donate the full 50,000,
Right.
right? Which still gives you that same $23,000 in savings for the charitable donation.
Right. So if you're somebody who is still planning on making a charitable donation this year, and you have stocks, then this is something that you might want to look into if your stocks have been going up.
Really, definitely talk to your advisors, both your trading advisor as well as your tax advisors, because this is it's you know, again, when we add this up and you're saving over $13,400 is the difference between you and the charity on $50,000. That's
a
huge.
big difference.
Yeah. So even if you reduce it down to $5,000, it's still over $1,000 that between you and the charity are benefiting by to execute a program like this.